What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is going to be a little bit different. This is going to be a compilation video of days 18 through days number 26. So I've been going through a little bit of drawdown. So what I want to do is create a drawdown plan, break it down, explain it, figure out where my losses are coming from, where my wins are coming from, talk about the best lessons that I've learned from this drawdown period, and then take a detailed look at each of the losses from the past 11 sessions, and then finally put it all together and go forward with something that can help me get out of this period. So let's go ahead and let's get right into it. So let's talk about my drawdown plan. So drawdown, let's just go ahead and define what drawdown means. Drawdown is a period when you have made maybe an account high, and then you kind of start to fall off a little bit, where you see your equity curve start to go down and make lower lows and lower highs. So that usually comes, in my experience, from overconfidence. It comes from believing in yourself too much and not respecting the market enough, basically thinking that anything that you do is just automatically going to be gold, and not coming to the market and putting forth your best effort on every single trade. So that's usually what leads me into drawdown, and that's pretty much what I've been going through, because I got really close to hitting the target that I was aiming for in order to get to the withdrawal level. I needed to make 28.50. I got my account all the way up to a point of 25.50 at the highest point that it's ever been, and then from that price point I just fell all the way down. Well, not all the way down as in like losing the account, but I went from 2,500 in profits to 900 in profits, and that's where I'm sitting at right now. So what I've realized is that I've had pretty much, like, I'm not gonna say all losing days. I've had like maybe streaks of 3 or 4, then 1 winning day, then 3 or 4 a winning day, and now I've finally kind of been able to turn it around these past couple of days. So I want to just discuss exactly what led me to this drawdown period and how I want to get out of it. So let's go ahead and get into the drawdown plan. So the first thing I need to do is I need to identify where my losses are coming from. That's very important, because when you're in a drawdown, the one thing you don't want to do is just lose all of your bearings about yourself because it's so much stress. It's a way to work through any drawdown, and this is the first step. Identify where your losses are coming from, because if you know why you're losing and how you're losing, then you can take steps to kind of rectify that and make sure that you don't make those mistakes in the future. And that leads us into the second point, which is identify the changes that you need to avoid repeating those mistakes. That's very important, because it's not just enough to understand what you did wrong. You got to understand what you need to do in the future in order to avoid these mistakes. So that means you need to give yourself alternatives. So instead of me going long at the highest price, instead I could wait for a better opportunity where prices pull back to an important level of support, or I could just skip that entire section of the market in general and just wait for a different type of setup to come around. So you want to make sure you give yourself different options. You don't have to make that same mistake that you did before, because it's always a choice, and it's up to the trader to be able to make the right decision. So number 3, figure out where the best opportunities have been during this drawdown period. Because if I'm in drawdown, that means that for whatever reason, I'm not taking the best opportunities. Now that could be because of self-inflicted wounds as a trader that I'm causing myself, or it could be because the market characteristics have been changing from week to week, and I might be trying to trade what the market was like last week and not adapting to what it was this week, or it could be a combination of both of those things. So it's always important to figure out where the best opportunities are and how you can adapt in order to put yourself in a situation where you can take those trades where the best opportunities are present. So next, let's identify where my winning trades came from, because if you can understand where your losses are coming from, you know that those are the things that you need to avoid. If you can identify where your winning trades are coming from, you know that those are the things that you need to continue to do, and those really play a big part when it comes to identifying your losses and identifying your wins. Once you get those two things down, you're really on the road to turning this thing around. So next, list out the best lessons that I've learned during this drawdown, which is very important, because you don't want to have a drawdown period and then kind of run away from the market. The way I look at it is I've been losing money out of my account. So that means it's money coming out of my pocket, which means that if I'm going to pay for something, I'm leaving the store with it and I'm getting the most for my money. Like, you're not going to go to the store and buy $100 worth of groceries and then leave them up there like, you know what? Y'all can keep them. I don't need them. I just wanted to buy them just to buy them. Nah, you're going to take your groceries home because you pay for that. So if I'm going to take losses in the market and money is coming out of my pocket, at least let me learn something from it so I can get something out of that payment that I just made to the market. You know, that's my tuition payment. That's how I look at it. So it's important to list out the best lessons that you learn, because these lessons, even though it's a tough lesson to learn and a tough pill to swallow, these will be the lessons that'll help you become a better trader. And when I went through drawdown periods earlier in the year, I tried to avoid learning and just say, you know what, I'm gonna trade myself out of this drawdown. That's what you have to do, but you also have to learn along the way, because learning is fundamental. And if you don't want to learn as a trader, it's gonna be hard to make those steps forward to continue getting better. So learning from these lessons, even though it's tough, is very important. So next, writing out good notes to help me lock in these lessons that I learned. So what I like to do is I like to go back, and I think I've showed you this before. I have different folders for different setups that I like to see, and then I'll go back and just annotate them and say, okay, this is what happened on this day. I should look out for this type of setup. When I'm trading this variation of the higher low, this is more likely to happen as opposed to this happening. So writing out good notes will really help you just kind of lock in those lessons that you had, because they say that if you write something down, now I don't know if this is like physical writing or because it's 2023, maybe typing it out. I don't know if it's the same, but I assume that they are. But either writing out or typing out your notes just helps you remember them a lot more, because now you have a memory associated with that pen or that paper or that keyboard where you say, oh, okay, I remember this because I remember writing this out a while back. So then it makes it easier for the brain and the subconscious to actually just remember those lessons. So always write out good notes. And then next, I need to look to make improvements through diligent practice, and I need to learn from my back testing session. So the best way for me to get better that I've learned is that I got to hit the back tester hard, and I got to make sure that I back test the same exact way that I would trade in real life, and try and replicate a real life session to the best of my ability, and try and just do all of the right things, follow my trading plan, and have great practice sessions, and look for that practice session to kind of translate over into the real life session, where you get to the point where you practice so much that it's hard for you to get it wrong, because you know exactly what you need to do in order to get it right. So that right there is my drawdown plan, and that's how I plan on working myself out of this drawdown period. So let's go ahead and move on to the next part of the video, and let's talk about where exactly my losses are coming from. So I went through all of my charts from this 11-day period, and I figured out all of the things that went wrong, and this is what I came up with. So number one, shorten the higher low failure improperly. So I need to determine the difference between a good higher low failure and a poor higher low failure. So what I've found over my research so far is that when it comes to a higher low failure, you need to make sure that you see signs in the market that support the fact that the higher low should get broken through, because a higher low failure typically occurs during a very strong downtrend. So let's go ahead. Let's just look at some examples. All right, let's see. Higher low failure. Okay. All right, so here's an example I did from a back testing session on May 26, 2021. So let's go ahead and just read through this really quick and break it down. So this is a great example of how price action can verify the validity of a higher low break and failure. The initial down move at A1, so this one right here, showed that the sellers were the dominant force at that time in the market, because all of these bear candles, it just shows you that, hey, it's all selling, not too much buying. So you want to be on the side of the sellers and not the buyers, at least in this specific moment. So then prices were able to make a decent move back up to the point at B right here, but prices right here were sharply rejected from the resistance level of the prior higher low at A. So if we take this prior higher low that we see right here in the circle and we follow that support level across, it lines up directly with the turnaround point that we saw at B. Now B also established a lower high, so that's very important. So let's pick back up. This rejection led to selling that eventually subsided when the higher low at C was made. So this rejection at B led to the selling that pretty much resided once this higher low got created at C. Now, this is what I mean when I say all higher lows are not built the same. They're high quality versions of it, and then there are low quality versions of it. And this right here is a low quality version, and I want to explain why. So this variation of the higher leak is what of the higher low is weak for multiple reasons. Number one, the trend right here was already down, as we can see from A1. The trend was down, and we already formed a lower high at point B. So that means that, yeah, the buyers came in with a little bit of demand down here, but all of that demand kind of fizzled out once they got back up to major levels of resistance. You combine that with the fact that we're already in a downtrend. That's a sign that tells you, oh, okay, yeah, we did make a higher low at C, but the overall downtrend is still pretty strong. So let me keep that in mind. So number two, in comparison to where prices were at B, point D established a second lower high. So we had this higher low at C, but then we came back up to D and established a second lower high. So it's like, y'all made a lower high at B, then again at D. It doesn't give you all the signs that you need to know that you should probably start looking for a short, but it's starting to build up and the signs are starting to pile up. So the next thing that I look for is a retest of this previous lower high that got established at E. And that's exactly what number 3 talks about. So prices came back to retest the lower high at E and then sharply sold off from that level. So notice how they came back up, they retested that level, but they wicked off of it and pretty much closed very bearishly and very strong to the downside. So that's telling you that all of the sellers that were over here from before, they haven't went anywhere. The sellers are still there and they're looking for an opportunity to push the market lower. That's what price action is telling me right here. And then number 4, prices then created the third lower high at E1. So we have lower high number 1 at B, number 2 at D, and then number 3 at E1. So once you've seen 3 lower highs, that pretty much invalidates any thoughts that I had about going long right here at the higher low from C, because even though I do like to go long based on the higher low support level when it comes to that higher low strategy, I also don't want to ignore multiple bearish signs that are in the market at that time. So E1 was the third higher low that pretty much said, all right, let me skip the higher low trade and skip the long trade right here and instead look for a break of the higher low and then look to potentially short it if I get the setup that I want to see. So that was number 3. Prices then created the third lower high at E1. Okay, we talk about that. And then last but not least, number 5, prices broke back down below the higher low support level from C, and then they were never able to break back above it. So once you see all of those things start to happen, then that's when you can feel confident taking a retest right here on either this green candle as we come back to retest that level, or on the red candle right next to it as we come back to retest that level and that break of the higher low support level. So all of these bearish signs just increase the probabilities of the downtrend continuing once the higher low was broken through. So this right here is a perfect example of what I want to look for when I'm trying to trade a failure for a higher low. You know, a lot of times what's gotten me during this drawdown period is the fact that there has been higher lows and they've been broken through, but I shorted them one way before I saw any important bearish signs. Not even one, just the fact that they broke past the higher low was the only signal that I was going off of, and that's just not enough. You need at least 2 bare minimum. So when I see higher lows that fit all of these standards, it makes it a higher probability trade for me to get into. And I think that's the biggest lessons that I learned when it comes to that higher low failure. You want to make sure that you set yourself up for success, and you do that by making sure that you have multiple bearish signals before you start trying to short that higher low failure. So that's what I learned about the higher low failure and determining the difference between a good one and a poor one. A poor one comes when you have multiple bearish signals in the market that are telling you that, hey, maybe you shouldn't go long. Now, a good one is when you have a higher low that gets established and there's no bearish signals at all as prices start to move back towards that level of support, which pretty much gives you a double green light to go ahead and go long as prices come back and retest support. So that's what I learned that distinguishes the difference between a good higher low and a poor higher low. So then next, not locking in my profits when they were available. If my target isn't hit, it's okay to take less. And this was a really big factor for me on November the 3rd. So let's go ahead and talk about that. This was the day that I talked about earlier where I said I got my account balance all the way up to a high of like 2,500 in profits. And then from that point forward, I just kind of fell off. So let's go back to that day, November 3rd. That's Friday, right? Yep. Okay. All right. So we don't need to talk too much about the gains. All of my, well, since we're going to go ahead and get to the charts, let's talk about the gains too, so it all makes sense and we can put it all together. So where my wins are coming from. Now, we're going to get back to where my losses are coming from. We're going to go through all of these, but look at the difference between the list from my losses and then the list from my wins. My wins are the same two things that have been working for me for the past 2.5 years. It hasn't changed. I've gone through all of my charts, and these are the only two things that work for me on a consistent basis. So it's buying the higher low, retest when there are no opposing bearish signals, and then shorting the higher low failure in a downtrend that has already produced several bearish signals. So that's pretty much a synopsis of all of the winning trades that I've taken throughout this 10 to 11 day period. So that was number one right there. I shorted here after prices broke the higher low support and then came back to retest it. But we don't need to focus too much on the winning trades because I feel like for the most part, I got those trades down packed. It's these losing trades in between that are throwing me off. So that's where all my focus is going to be located at. So number two right here, that's something else. We'll talk about that later. But number three, this is a great example of what I was talking about when I said I'm not taking my profits when they're there. On trade 3, I had a very good opportunity. I got in at the higher low support level using my higher low strategy perfectly. Perfect retest. No bearish signals in the market at all. So that gives me the double green light to go ahead and go long. Everything was good except for the trade management. Prices came up to a high of about 175. I got in at about 145. So I could have smacked about 30 points off of that trade, but instead I got about half of that, which was anywhere from 15 to 20 points on this one trade right here. And that's just not acceptable because I was moving my profit targets higher based on the trend that I was looking at, which is cool because it's like, okay, you want to adapt to the market being more volatile. But for my strategy, it just works better for me if I lock in profits, because when I lock in profits, it does something to my way of thinking in that time period. It opens up my mind and it helps me make better decisions because it takes off the stress and the pressure of having to know that I need to make money. Once I've already made a good trade, I'm like, oh, I'm good. If I don't catch another trade all day long, I could stop right here and still be happy with the results. So that puts me in a state of mind where I'm not chasing anything. I'm really just waiting for the best possible moves to come around. And when those moves come around, I get in, and that's the only time I get in. So it's so important for me to just take my 20 to 25 point profit whenever it's there. I don't need to get 30. I don't need to get 40, 50, 60, or 70, because I believe that I can come back, catch another higher low setup a little bit later, and catch another 20 to 25. And then you add those two up together, you have anywhere from 40 to 50 points off of those two good trades. And for me, that's what works. I've tried the strategy where I wait for a 50-point trade, or wait for a 100-point trade. I know how to use those strategies, but they just don't fit my personality. So even if a market might look very lucrative, where it's plenty of opportunity, that doesn't mean that I expand my profit target. I keep my stuff the same because that's what works for me. So that's what I need to do going forward in the future. So that was number 3 from part 1. So this is November 3rd, part 2. And this is just more of the same. Look at trade 8. On trade 8, I went long here after seeing confirmation, the higher low. So I was still too greedy and left a lot of points on the table. And this trade was just, it could have been so perfect. I still got like 20 points out of this one, but I could have had more. I could have had about 40. Because prices came all the way back up to a major level, a major quarter level, which was 225. Anytime prices are in a very strong uptrend and they don't have any price action to the left that you can base where you want to get out on, where you want to get out from off of the past history, you have to start using important levels that you know will probably be major points where people will do something. You know, maybe they might buy, they might sell, but they'll do something at this price. So for me, what I've learned is that those levels are quarter levels on the Dow Jones. So it'll be your 200s, your 225s, your 250s, 275s, 300, and so forth and so on. So for prices to come all the way back up to 225, they wicked off of it on high volume after they've already moved up by at least 100 points going back down to where we came from. So for me to expect continuation right there, it doesn't mean that it can't happen. It just means that it's less likely because the move has just ran too far. It needs to pull back first, needs to reset, and then you'll get a bigger move to the upside. So right here, I just didn't capitalize on the opportunity that I had. You know, prices came back up to a major level that made sense to get out from, and I still didn't do it. So that was strike number 2, because strike 1 was the fact that I already had my 20 locked in, but I didn't take it. That was strike 1. And then we see prices come back up to a major level and then sell off, and it's like, okay, you didn't take it there either. That's strike 2. You want to make sure that you make the right decisions in the market and you don't let the greed get to you. On this specific day, on November 3rd, I wasn't trading the chart. I was trading this number up here, this equity balance, because I was like, ooh, I'm so close to reaching my levels. I'm so close. Let me just get there. And I could have got there on this day. That's the craziest part, because if I would have locked in all of my trades for the 20 to 25 scalp target profit that I was looking for, I would have hit that level and then kept going and had even bigger of a cushion the next day coming in. But that's not how it went, because I got a little bit too greedy, and that's the biggest lesson I learned. When it comes to your winning trades, lock those in. Same thing over here at trade 16. I went long right here, had an opportunity to get out once again at that same price level at 225. So it played a part earlier, played a part later too, and I still made the same decisions and ended up with the exact same results. A trade that was decent. It was okay. I made some money from it, but I left way too much on the table, and that affects me going down the line into the future. Same thing right here on 10 through 12. I shorted right here, had an opportunity to get out, didn't do it, moved my break even back to my original stop loss entry point, got stopped out. And then on 13, that was just a bad trade. I can't make any excuses for that one. I shorted near the lows right here. That was something that we're going to talk about coming up a little bit too, when it comes back to the screenshot about where my losses are coming from. This is a big reason that I'm taking losses too. Shorting near the lows or buying too high near the high of the swing. So then on 14 and 15, I shorted right here as prices came back and they violated a prior higher low. So that's my setup. I'm trading it perfectly. Great entry. But when prices came back down to a major level of support, it's like, all right, Ty, what are you going to do? You going to hold it until it drops down to the bottom of the earth, or are you going to get out at a major level of support and just lock in that profit? What I've learned is that you can't hold on and hope for more. You know, once you get to a major level and your trade is in profit, that's where you get out, plain and simple. You know, I'm not a long-term investor. I'm a short-term trader. My average trade is about 1 minute and 45 seconds. So that means I'm in and I'm out in the span of less than 2 candles. So if I get in at a good price and I see the reaction that I want, prices come back to the level, I need to get out. No thinking, no hesitating, just doing it. And if I can do that, I think I can lock in a lot more profits, because these little small trades, they might not hit my regular 20 to 25 point profit target, but they definitely add up over time when you rack in 10, 15 here, 20 here, 15 here, 12 there, 10 here. It really makes a big difference. So when I talk about not locking in profits, that's exactly what I mean. And it makes a big difference. Big difference. And that's one of the biggest lessons I learned from that lesson right there. So number 3, buying too far away from support when trading a higher low retest. So let's go back to some examples. Let's actually go back to November 3rd once again. I think on trade number 2, I made that exact mistake. So if we look at 2, it says it's critical that I enter at support when using the higher low strategy, because yeah, you know, the higher low is a very lucrative strategy, especially when you're in a very good uptrend. But it still doesn't mean that you just can go long and just be like, oh, whatever, it's a higher low, so I'm gonna go long. I don't care how I get in, I'm just gonna get in. It doesn't work like that. you still have to remember that you gotta go long as close as you can to that support level from the higher low, because that's where the demand is at. So if you're buying in front of the demand, more than likely prices are going to come back down to that support level and then turn around. And that's exactly what happened on trade 2, because as you can see, this orange triangle is where I got stopped out at. The blue triangle is where I went long at. I got stopped out at the exact same place that I should have been buying at. And whenever that happens to you, that means that you're a little bit too early trying to enter into the market, and that you got to be a little bit more patient. The idea was right. The idea was correct, but the execution was flawed, and that caused me to take a loss right here on trade 2. So it's so important to remember that. That happened on November 3rd. Now, if we go back to November 6th, this was on the following Monday. I went long right here at 5 and 6, but look at where I went long from. I went long way above support. Support was down here and had been support for a good little minute, going all the way back to 10:30. I took these trades around maybe 45 minutes later, so that support level was already clearly established. And I came back to 5 and 6, and I just got FOMO because I felt like the market was going to move without me, and I didn't want to miss out on the uptrend because I saw how strong the trend already was. I'm just like, man, I need to get in, and I need to get in now. But that goes back to what I talk about a lot when I say that you got to have a mindset of abundance. It's no reason to feel like I need to get into a move, because if I don't, I'm going to miss it, and I don't want to miss it. So what if you miss it? The market is going to keep moving. It's going to be plenty of opportunity all day long. So if you miss one, it's all good. You can take the next one. I trade a 1 minute chart. It's opportunity on every candle almost. So there's no real reason for me to try and chase something that's not there and try and force a trade that I don't have to. Because if you look at 5 and 6, if I would have went long at support where my stop was at, look at what would have happened. I would have got the same results that I got from trade 7 when I finally turned around and did it the right way. Because if you see on 7, prices came back, they made a higher low, and then I went long as prices came back to retest that higher low. So I'm going long, but I'm going long near the support level after a higher low has been made. So that increases my probabilities of being successful, as opposed to just going long because prices have moved up a little bit and you want to ride that momentum and you feel like you might miss out on the next leg of the uptrend if you don't buy it right here. So always remember that it's no need to buy high and there's no need to short low. And when it comes to short and low, one of the things on my list of things that don't work is me shorting the higher low, expecting for the higher low to be a higher low failure variation, but I'm shorting too low into the swing. And that's something that I've been learning not only throughout this drawdown period, but throughout a whole lot of, my trades that I took all year long. And the lesson is pretty much that no matter how good your setup might look, if it's coming near the lows of the swing and your setup is coercing you to get into the market short, you got to skip that trade and say, look, I know it's a good looking setup, but I need to take this setup in a region where prices are not at the lowest point that they've been for the entire swing. So if we look at trades 2 and 3 right here, I was trying to short the higher low, right? So if we read the notes, it says I shorted here after the higher low was broken, but a clean break increases the chances of the short working here. And when I say a clean break, what I mean is that you really don't want to see the higher low get broken with a whole lot of wicks. All of these wicks are indicating that it's a level of demand down here for whatever reason. Now, you might not know the reason until later on or whatever. Maybe you got to look at the higher time frames. But the wicks are telling you every single piece of information that you need to know. It's telling you that demand is down here. Buyers are down here. So more than likely, that's not the place that you want to go short from. You want to wait for higher prices to come around. And then you want to see how they react around those higher prices. And if you get the reaction that you're looking for, then that's when you want to short it. But right here was just way too early. I saw prices break down below the higher low. So I said, oh, okay, they closed down below there. Cool. Which is good. You want to close below that level of support. But if it closes on a wicky type of candle, it invalidates that close. And it means that you got to wait for a better close where the whole candle closes below and it's no wick. Those wicks can really, really, really get you if you try and go against them, because the wicks are representing buying momentum. So you don't want to short and go against that. So that's one of the biggest things I learned also, which is don't take that short setup if it comes near the lows of a swing. So I want to go back to a day where I took that trade twice, the wrong way the first time and then the correct way the next time. What day was that? Let's see. Here we go. Okay, this was from November the 10th. So look at trades 5 and look at trade 6. So on 5, I've learned that the higher low failure trade works less often when it comes near the bottom of a swing. This was from November the 10th. I think that was either Thursday or Friday, one of those. I think Friday. So yeah, that's the biggest thing I learned on Friday, which is when you have that higher low set up, you do not want to short it if it's coming near the lows of a swing. That's where trade 5 was located at. Now take a look at trade 6. This is the same exact setup that I traded. The failure of the higher low getting broken through, because this is the higher low right here. I circled it up, drew my level of support across it. But notice the difference between the location of 6 and the location of 5. The location of 6 did not come near the lows of the swing like 5 did. I shorted right here at around, I think, let's just call that 34,000. Okay. The lows for this entire range was 33,990. So I'm only shorting 10 points away from the lows of the entire day so far up until that point at trade number 5. So that's just a low probability trade because you don't want to short the lows unless you have a very wide stop. I have a very tight stop, so I can't short at the lows. I got to short from higher prices or else it's like a 99% chance that it's not going to work for me. So when we see this higher low at number 6, this higher low came at 34,050. So we're around 60 points away from the lows. So I have a lot more wiggle room and a lot more room to work with on trade number 6. And that created a big difference. So on trade number 6, this higher low failure worked because, for one, we were in a downtrend, right? So that's bearish sign number 1. We have a higher low, but then that higher low led to a lower high. So we have a downtrend and then a lower high that got established. That's sign number 2, bearish signal, right? And then we actually break down below that level. So that's signal number 3. And that's all I needed in order to go long, in order to go short and then short prices back down to the previous lows that were made already and then take profit. So that's how I should do it when it comes to trading those higher lows. So this was a great example of me doing it wrong and then me doing it right. So you always want to make sure, no matter how appealing that setup might look, you do not want to go short near the lows and you do not want to go long near the highs. That's a lesson that's been plaguing me for a long time, but I will get through it and I will learn from it. And today is a good day to learn. So let's move on to our next topic about where my losses are coming from. So we talked about buying too far away from support, buying too high, and we also talked about shorting too low, which is a note that we had coming up later. So I guess we can skip that. So then let's move on to the next one. Double dipping after a trade just lost money. So this happened a lot of times this week because, like I told you before, I was super confident coming off of the week from November the 2nd and November the 3rd. It's the best trading week I ever had in my life, ever. So I felt like, man, I can't go wrong. And if I do have a trade that goes wrong, I'm going to just get in again because how could I be wrong? No way, Jose. But that's not how it went. You know, that's not how the market goes. You got to come in and make a good trade, but still be humble enough to say, oh, I made the wrong decision. So let me not double up on it and try and get back in again. So from November 3rd, and we talked about this one. All right, so November 6th, we talked about 5 and 6. This was a good example of me forcing the trade 2 times. I went long at trade number 5. We talked about that already. If I took my loss right there, I should have just took that loss and kept it pushing. For me to come back and do the exact same thing from the exact same price level during the exact same market scenario, I shouldn't be surprised if I get the exact same results. So that's what happened on 5 and 6. If you look at 8 and 9, I went long right here, expecting for the higher low setup to hold up, not realizing that this was kind of like a supply zone right here in between this line and this line. And if you follow those across, they pretty much make a perfect supply zone. So anytime a higher low gets established within a supply zone, the zone automatically overrides any setups that you're looking for the higher low. You got to trade the zone for the zone and ignore the higher low completely. don't look to go long based off of that. So that was my problem right here at 8 and 9. At 8, it didn't work for me, and that's okay. You know, I traded my setup. I didn't know at that time that it was a supply zone. So I was trading based on the best information that I had, and I made the best possible trade that I could on the screen. That's a loss that I'm willing to take. That's okay. It happens like that sometimes. But to come back and then double up on that loss on trade number 9 and take the exact same trade from the exact same location during the exact same market scenario and setup, it just doesn't make sense. And I ended up getting the same results. So that's very important when it comes to my losses. You know, it's okay to take losses. I've taken a lot of losses in my trading career, and I'm pretty sure I'm going to take a lot more. But to double up on losses and take unnecessary ones, it's just, that's not a recipe for success on a consistent basis. You want to make sure that you avoid doing that. So that's one of the biggest lessons I learned right there. Just double dipping after a trade just lost money is a very low probability strategy. You don't want to do that. So let's move on to the next one. Not cutting my trades fast enough when the market characteristics changed. Now this was interesting because this is a problem that you only really run into once your strategy is already working, because the market kind of put me to sleep on a lot of these charts because I was in a good trade, I was making profit, and I was like, well, if the market is already going my way, I mean, I don't really have to stress. It's not going to turn around anytime soon. And even if it does, the trend is super strong. So I believe that the trend is going to continue, even if I do see signs that are telling me that market characteristics are changing. So a great example of this would be trade 16, 17, 18, and 19 that all occurred from this right side of the chart towards 245 on November the 3rd. So 16, we talked about that, right? But look at one part I didn't talk about trade number 16 was the fact that I doubled up on my contract size. So I usually trade two contracts. I bought 2 right here at 16, and then I bought more right here right before A happened. So I saw this higher low get established, and I'm like, oh, okay, I'm already long. The way I treat my trades is if I'm going to add to my position, I only want to add if it's at a spot where I would get in anyway if I wasn't in that trade already. So I was like, ooh, a higher low during an uptrend. We're coming back up. We're getting close to retesting this prior high. So I'm like, oh, we made a higher low right before there. That should be the catalyst that we need that's going to push us up to retest that level. Perfect. So let me get in right here. And I did that. And that right there was a good decision based on everything I was looking at during that time period. But then one candle later after I entered, we had this higher low we had this lower high get established right here at A. Now this is a very small lower high. Not too menacing. It doesn't look too serious. So it's like, look at how strong the uptrend is. I don't really believe in that lower high. So I'm going to continue to hold on to my long position. Now this long position ended up coming back to break even. Well, a little bit of profit. I think this trade made something and this trade lost something, but overall it was a small profit when you combine those together. So it was cool. You know, I didn't make what I should have on that trade, but I made something, right? But I got greedy on 17 and 19, and I'm like, look, I see the lower high, but I don't care. I'm going to go long anyway because the trend is strong, and I believe that the trend is going to go up. I don't care what the market says. If I say it's going to go up, it's going to go up. So that was pretty much the mentality I had on 17 and 19. And you see the results. I got stopped out after I doubled up on my contract size because I went long twice right here. Once on this blue triangle and twice on, well, once again on this next blue triangle. So that's just a lesson about making sure that you respect all of the signs in the market. If it's a lower high, that doesn't mean that it's going to be an automatic reversal. But it does mean that more likely than not, prices are going to pull back a little bit. So if you're long, wouldn't it, if you know that, well, if you have a good idea that prices are about to pull back, it would make sense to go ahead, lock in those profits. And then when the uptrend starts to resume, that's when you get back in. So that right there is the biggest lesson I learned from, you know, the market characteristics changing. Price action is not going to lie to you. And when I look back on my trading career, I can't really pick out too many occasions where the price action lied. The price action is going to tell you exactly where the market is going. It's just up to you as a trader to be in a mentally calm state where you can recognize all of these things without having your emotions get in the way, like letting your confidence or your ego get in the way and make you say, oh nah, I see what's going on, but I don't care, I'm gonna ignore it anyway. That's not what you want to do. You want to make sure you recognize and read these price action signals and make the best according decision based on what you're seeing at that time period. So that's very, very, very important. All right, so let's go back down to the places that my losses are coming from. So not cutting trades fast enough when the market characteristics change. I think I have one more example on that. So let's go forward real quick. What was it? Here it is from November the 7th on part 1. So look at trade number 9 over here. Notice how we were in a very strong uptrend from the time the market opened all the way up until 11:40. So a 2-hour uptrend where we moved from 34,100 up to about 260. So not too bad. 150 point move, not bad at all. So I get long right here at trade number 9, expecting for the prior higher low from what is this, 1135. So I'm expecting that prior higher low to hold up. Okay, that's a good trade, right? But what made this trade such a bad trade, in my opinion, was the fact that I just went long because prices came back to retest the higher low support level, but I'm ignoring the fact of how they got there. They got there by making a lower high right here, followed by a second lower high where I went long from. So I had an opportunity to get out on this candle at break even or for a smaller loss than what I took if I was willing to acknowledge the signs that the market was giving me. It didn't just give me one lower high, it gave me 2 lower highs. So I'm like, all right, how much do I really want to fight the market? 2 lower highs. I can't be long after that. And that's the reason I got stopped out right here on trade number 9. So that's what I mean when I say you gotta make sure that you don't fight those signs that the market is giving you. Price action will not lie to you. So when you see price action start to change and the market starts to switch up, get out. It doesn't matter if you have a profit, a loss, doesn't matter. Just go ahead and cut the position and put yourself in a spot where you can think clearly. It's harder to think when you're in a position because you just have a bias. No matter how strong you might be from a mental perspective, you have a bias because you're in a trade. When you're not in a trade, you're like, oh, okay, I see the market for what it really is. So it's important to always get yourself back to that level of calmness, that level of being mentally centered so you can make the best decisions. And getting out of your trades when they're not working is a great way to be able to get there. So the next point we talked about already, shorting too low and buying too high. Got to make sure you avoid that. Number 3, trading against momentum and long tail wicks. This has been a problem for me, not only for these past couple of days for this drawdown period, but for a long time. Because I don't know what it is. It's like sometimes I see the momentum coming in and I try and outsmart the market and I try and say, ooh, I know exactly where this momentum is going to fade out and fizzle out. It's going to be at this next resistance level above. So that's where I'm going to short it from because that's where the market is going to turn around from. But the thing about momentum is that that's not how momentum works. Momentum is going to keep going until the buyers or the sellers, whatever way the market is moving, until they decide that this move is over. When they decide that the move is over, then you can start looking to kind of go against that move and fade it. But you definitely don't want to go against momentum. So let's go back to some very specific trades from last week. Let me see. It was definitely some wicks that got me. Where was it? All right, so this is a situation. I didn't take a loss off of this. Well, hold on. Here we go. Here's one. 11 from November the 7th this year. So notice how right here we had a long tail wick that shot to the downside on heavy selling momentum on heavy volume also. All right, so I expected for that down move to continue because if you look at this higher low, prices never came back to retest that level. This wick, it looks like I shorted and caught that move, but I actually shorted after that move happened and then it came back up. So I'm shorting right here. And then I'm like, hold on. I remember my notes told me to not get in the way of momentum. So when prices came back down, I was like, well, this might be one of those times where momentum fizzles out. Oh, okay, I was right, huh? Yeah. But prices immediately came back on the next candle and came back to break even. Now, this was a scenario where I kept my break even stop where it was, and I'm glad I did, because if I didn't, it would have came back and got stopped out up here. But this is a great example of what I mean when I say you don't want to go against momentum coming in, because momentum can continue higher more than likely than you can stomach, and probably further than where your stop will be located, so you'll end up getting stopped out. So you always want to make sure you don't go against those long tail wicks, because just looking at this chart in specific, if we look at all the long tail wicks that occurred, they all led to a either reversal or a significant pullback. So we had a wick right here on high volume, very high volume. It led to a pullback. We had a wick right here on high volume that led to a pullback. Same thing right here. Now, this per se wasn't a long tail candle wick, but if you look at how prices had so much momentum coming off of that selling move that just happened, that represents momentum coming into the market. So it doesn't always have to be a long tail wick. I shorted right here trying to go against that momentum too. Now, on this specific day, the market was definitely giving me a pass for shorting against momentum, because I just kept getting stopped out at break even instead of having to take a full loss. But I can show you plenty of other days where I had to take that loss. So this is a great example of why you just don't want to go against momentum. Momentum can go further than what you think it can. So you want to make sure that the momentum fizzles out and you see some type of signal that tells you that momentum has fizzled out. So let's say you had an uptrend like this one where we came back from yesterday's closing price. This was 165, I believe. Then we came all the way back up to around 195. It's like, all right, well, that's definitely momentum, so I don't want to short in front of that. So you always want to make sure you avoid the momentum no matter what. All right, let's see what's next. Okay, this long tail candle wick over here from this zone. More than likely, you probably would have thought, oh, we're finally breaking out of the zone, because prices at one time had a completely red candle. It looked like strong momentum, right? Volume coming in. No, look at how it closed. That's what's important. It closed with a long tail wick and then immediately moved back up to test the top of the zone once again. So that right there would have been very detrimental for me if I would have shorted that and expected for that short move to continue after a false breakout. Same thing over here with this long tail candle wick. It shot back up to the upside for a strong pullback and eventually made its way back up to the top of the zone. So you always want to make sure you don't go against momentum and you don't go against those long tail candle wicks. So that's one of the biggest things I've been trying to work on this week also. And I think since we're on this chart, let's go ahead and talk about another one of the lessons that I had to learn, which is going long or just entering into any trade within the middle of a zone is just unreliable. That's never worked for me. Not during this drawdown period, not before this drawdown period, not last year, not the year before that, and not the year before that one either. It's never worked for me based on how my strategy is based and used. So for me to go long in the middle of the zone, it's just pretty much setting up for automatic loss. So when it comes to a zone, what I need to do is I need to either go long from the bottom or I need to short it from the top. And those are the only two ways that I need to be looking to trade a zone at all. Anything outside of that, just throw it away, let it go. It's a trade that you got to skip. So that's one of the biggest lessons I learned also. So let's go ahead and get back to those losses and talk about and continue to discuss where those losses came from. Okay. Oh, that was perfect. Did two of them in one. So trading against momentum and long tail wicks, gotta avoid that. Trading the zone from the middle, unacceptable. You gotta avoid that. Entering as prices reclaim a higher low level. Now this was pretty interesting because this was a variation of the higher low that I started trading that I didn't have too much experience with, but it worked for me a couple of times. So I was like, oh, okay, that's what I'm gonna start doing now, because I found out a new way to trade my setup. But what I've learned is that I need to take a little bit more, I think I need to take a little bit more of a detailed approach when it comes to studying that setup. You know, I need to see more examples of it and see different versions of it where it works, different versions where it doesn't, so I can build that confidence to be able to trade those. So let's go ahead and try and find an example of me doing this. 7th. It's crazy when I do my trade reviews and I'm looking at all the charts. I wrote these notes out and I was like, oh, okay, this trade is why I wrote these notes. But then when I'm on the video and try and go back and find it, I can never find it. Hold on, no, it's up here somewhere. It was definitely last week. Hold on, y'all, bear with me. Give me a second. Let me find it. Here we go. Okay, from November the 3rd, let's look at trades 5 through 7. And we could also look at 4 too. So on 4, I went long right here as prices spiked back through a prior higher low. So notice how the higher low got established right here. They pushed down through it, came back to test the wick from that higher low. And then once they pushed back above support, that's where I went long. But a lot of times it just doesn't give me the momentum that I'm looking for. I'm expecting for prices to have a big move back up to the upside once they break above that higher low. But it doesn't always work out like that. And trades 5 through 7 were a great example, because we read the notes, it says, I went long here at higher prices. Greed got to me today. I have to resist the temptation. That's something I talked about earlier, which is can't go long at higher prices, especially when you're trying to trade the reclamation of a higher low level. So it got broken through once, and then it came back and broke past that level to the upside. So I went long. But look at this candle right here where I did go long. Look at what happened. It was green for a good amount of time, but it didn't close like that. It closed significantly in the red, very far away from the highs that were made on that wick. So it's like, ooh, Ty, you just bought a false breakout. And that's usually what happens when I'm trying to go long based off of prices reclaiming the higher low level. Because it's like, if you're going long as prices are coming into a higher low level, as they're coming down into it, you're going long at support near the lows of that swing. But if you're going long as prices are on the way back up, breaking above that higher low level, now you're going long at higher prices. So you could go long at the same spot, but based on what the market is doing at that time, you could be the right way to go long or the wrong way to go long. Remember what we talked about earlier. The right way to go long is near the lows of support, not near the highs. So you could get in at the same spot, but based on what the market is doing, your entry could be wrong. And that's what I learned on 5 and 7. So also a bigger lesson that I learned from that is that I don't need to look for new variations of my higher low strategy. I have 2 variations of it that work very well for me. They've never let me down, except for when I traded them wrong. But when I trade them the right way in the right market environment, I'm very consistent with those. So I don't see the purpose of me trying to expand my playbook right now. I have 2 things that work for me, and they work on a consistent basis every single day as long as I follow my plan. So I'm like, all right, you as a trader, when you start having success, like I was having a lot of success this past month and a half, 2 months, it just makes you, it's like a natural human tendency to say, okay, let me keep expanding. Let me add more setups to my playbook so that way I can catch even more trades. But what I've been learning is that it's not about going wider, meaning that you have more numbers. It's about going deeper, meaning that you take what you already have and cultivate that even more. So let me focus on my 2 strategies that I use, either going long based on the higher low support holding up, or going short based on the higher low support breaking through and it being a higher low failure. That's what works for me. So let me take that and go deep with it and try and figure out how to get better at those 2 specific setups, not adding a 3rd setup, because then that's going to stretch me thin. I need to focus all my energy into what's working. So that's the biggest lesson I learned from this, which is don't try and reinvent your strategy. Just keep doing what's been working for you and work on getting better at what works. You don't have to add anything new. Stick to what you know and you should be good. So that's a really big lesson I learned right there from pretty much just not trading against momentum and then entering as prices reclaim a higher low level. That's the biggest lesson I learned, which is don't try and expand too much. Hey, take what works for you, stick to it. And then last but definitely not least, fighting the trend and trying to outsmart the market. And this is pretty much just a synopsis of all of these lessons that are up here. And when you fight the trend, you're buying high or you're shorting low. Or in a scenario like I had the other day, so let's go to, which chart was it? Hold on, I'm gonna find it quickly this time, you guys. Promise. Okay, fighting the market. Oh, perfect day right here. Even the notes say it. Let the market come to you. Don't force it. Now, if you look at trade one, I went long based on the higher low setup right here. But look at the trend. The trend is down. So whenever the trend is down like that, and look, what's this right here, you guys? That's a lower high, right? So that means that invalidates the higher low right here and means that you got to skip the long entry. Perfect lesson right there. But I went long anyway because I'm like, look, it's a higher low and I'm gonna go long. But it's like, okay, you believe in your strategy, but you still got to use your strategy in the right times and the right market scenarios. If the trend is down and it's like down without a doubt, you don't want to go long at that higher low unless you're trading the second higher low. The first one, you always skip that. You skip that one and you look for it to be broken through because downtrend is too strong. Then I come back on 2 and 3, do the exact same thing. I went long right here expecting for the higher low to hold up because I'm just fighting the market. Like, man, it's a higher low, so it has to go up. It doesn't have to do anything. All the market has to do is follow the signs that price action has already given you. And if we follow price action, let's start up here from this wick. Now, you can't see it, but we had a strong downtrend back into yesterday's closing price, the previous day's closing price. You pushed up, created a lower high right here, and then I extended a level of resistance across that lower high. Notice how we came back up. We retested that lower high once, 2 times, and 3 times. Third time is very interesting because we actually moved away. We went from 190 to 130. So we were like 50 to 60 points away. So seeing prices come back to retest that level becomes less probable. Doesn't mean it's impossible, but it's less of a possibility. So the fact that prices still came back to retest that level and then wicked off of it very strongly just further cements the fact that the trend is down. So we sold off hard. Then we pulled back up, created a lower high, just like we did right here. And look what happened up here. We came back, retested that lower high, right? Look what happened right here. Lower high got established, pulled down, came back up, retested that lower high, couldn't break past it. So we have a retest of a lower high, which is also a double top, 1 and 2. And then we had a lower high that got formed. So for me to go long right there, I'm just ignoring all of the signs in the market. Did the same thing right here on 2 and 3, just still ignoring all of the signs in the market because I'm believing in my head that I can outsmart the market. I know exactly where the market is going to turn around. So I'm going to go long right there and I'm going to catch a great trade. You can't think like that. You don't know what the market is going to do. You just have an idea. You got to wait for the market to confirm your idea. And then if it does confirm that idea, okay, cool. Now you can get in and you can feel that confidence that you had. But you got to make sure that the confidence that you have in the market is backed up by the actions that the market is taking. Don't just get in here saying, oh, well, it's a higher low, so I got to go long right here because I know it's going to work. Not always the case. Then we come back on trade 4. I was like, well, if the market has been down for so long, I'm going to short it. The place that I shorted it from is the exact same place where the market began to reverse. So that once again goes back to not trying to outsmart the market. If we look at what happened right here, we had a double bottom right here. Bottom 1, bottom 2. And then we had a huge spike in momentum as prices came back into this previous higher low level. So I had my order already up here before this move even happened. But what I should have done is notice the fact that we made a double bottom with long tail candle wick followed by 2 momentum candles coming up into that higher low level. What's one of my rules that we talked about today? Don't trade against momentum. So for me to go against momentum right here, I shouldn't be surprised that I had to take a loss off of that because I'm breaking my rules. So you see bullish momentum coming in, and then you see the momentum actually start to roll in. You can't go against that. So that just goes back to more of the rules that I was talking about earlier. All of these rules, they play an important part, and they all commingle and interact with one another in one way, shape, or form. So that's very important right there. Don't try to outsmart the market. So that right there was a synopsis of where all my losses were coming from. So now let's go ahead and move on to the next part of the video. Where are my wins coming from? Like I talked about earlier, there's only two things, y'all. Buying the higher low retest when there are no opposing bearish signals, and then shorting the higher low failure in a downtrend that has already produced several bearish signals. So let's just go back to the trades from November the 3rd and run them all the way back until November the 15th today. And I promise you guys that every trade that we look at that's going to be profitable is going to be because I did one of those two things. So let's go back to November 3rd, part 1. Okay, on trade 1, what did I do? I shorted based on the break of a higher low after we were already in a strong downtrend after we established a lower high. Good trade right there. Number 3, we talked about that a little bit earlier, but it was a great setup, bad execution, but still it was a profitable trade that I took based off of a higher low support level, no bearish signals in the opposing vicinity. So it's a good trade to take. We got the double green light. Part number 2, trade number 8. It worked. What did I do? Waited for prices to come back, retest a prior level of support from a higher low from before, went long. Trade number 16. Looked to go long as prices came back, retested a prior higher low that came back to get retested during the uptrend. No bearish signals in the vicinity. The trade worked. All right, November 6th, part 1, trade 1, break even. Okay, trade number 4. Went long right here as prices came back to retest a prior higher low support level. No major bearish signals within the immediate vicinity. It's a good trade. Ended up in profit. Trade number 7, same thing. Went long based off of the higher low strategy. No bearish signals within the opposing vicinity. The trade worked. Trade number 10. I shorted right here after prices broke past a prior higher low. We were already in a strong downtrend, followed by a double top, a lower high that led to prices breaking down below that prior higher low level, which increases the chances of that short trade working. Made profit right there. November 6th, part 2. Okay, trade 12 came back to break even, but I did go long here as prices reclaimed the higher low. Ooh, that's what we talked about not doing. So let's just scratch that off the notes. Okay, let's go to 14. Well, actually 13. Look at 13. I shorted right here based off of prices breaking a prior higher low after they established a lower high, and then they broke past that level. All right, these came back to break even, but that was on me. I could have locked in profit if I needed to, but these trades would have worked because of the good setup that I took. Trade number 14, went long based off of a higher low, went long as prices came back to retest the support level from that higher low. Plain and simple. All right, November the 7th, winning trades. Winning trade on trade number 4. I went long here based on the higher low. It's the only long trade that I should have taken between 1 and 4. At 1, 2, and 3, I bought too high every time. So that's another reinforcement about that lesson I talked about earlier, where I said that if you're going to use the higher low support, you got to go long near the support level as closely as you can. Because if not, more than likely, you're going to end up having your stop and get hit at the same place where you should have went long. So very important to remember. But yeah, trade 4 going long based off of the higher low. So that's part 1. Part 2, let's see what worked over here. 10A worked. What is 10A? I shorted here once the higher low was broken through and retested. We were already in a strong downtrend, had a strong move to the downside, had a higher low. It tried to do something but couldn't do much, established a lower high, and then it broke past the higher low support level. I had all the signs that I needed to do what I needed to and go short. All right, November the 8th, what worked? All right, number 1, I shorted here as prices broke past the prior higher low. I took it down to support. What do we have? We had a downtrend followed by a double top, followed by a break of the level. I shorted and it worked. Simple. Number 4, I shorted using the same idea from 2 and 3. So on 2 and 3, I shorted here expecting for the retest of the broken higher low to be successful. So same scenario as trade number 1. What do we notice? We notice that we're in a downtrend, got a double top, a lower high at A, and then we broke past the higher low level from earlier. Perfect setup. I took that, I shorted it, it worked. November 9th, we talked about this. This was all losing trades on this day. November the 10th. All right, what worked for me? Trade number 4, trade number 6. So on trade number 4, when it comes to trade number 3, you can also short as prices are on the way back down. So on trade number 3, what did I do? Okay, I shorted based on the higher low, but I shorted based off of the wicks instead of shorting based off of the body. So that's something you got to remember too. Remember to short from the body and not the wick. And when it comes to trade 3, you can also short as prices are on the way down. So that's what I did. And notice the scenario where I took this short trade based on a higher low failure. What do we have? We had a downtrend, not the strongest, but hey, I'll take what I can get. We got a lower high right here. Prices come back, retest it twice, get rejected both times, create another lower high that breaks past the support level from the higher low. And then I just went short as they came back to retest it. Did the exact same thing on trade number 6. We were in a downtrend, established a higher low. That higher low led to a lower high right here at the blue circle. We pushed back down past that level of support from the higher low, and then I shorted. So these two scenarios, either going long based off of the higher low support holding up, or going short based off of the higher low failure actually being successful. These work for me the most. And anytime I have good trades, like you've seen it so far, all of my good trades come from these two setups, and that's it. November 10th, part 2. I went long here expecting the quick bounce from support. Notice what we have. An uptrend followed by a higher low. Prices come back, retest that level of support from the higher low, and then they move away. I didn't expect this big of a move because I was like, look, we do have some bearish signals, opposing signals. We had a double top followed by a lower high, but I'm like, the trend is already super strong, and this has been a major support level, and it was established on high volume. So I would expect for this level of support to hold up again and at least just get a quick bounce. But hey, it came all the way back up and made a new high. So the strategy works. That was November 10th. November 13th. Nah, all losing trades on this day. Oh yeah, don't go long expecting the breakout. Don't move your break even stop once it already gets triggered. Your break even stop is there for a reason. Respect it. Number 2, I shorted here based on the break of the higher low, but like I said earlier, when it comes to a zone, you don't want to short that zone based on a higher low. You really don't want to do anything in the middle of the zone. Now, this trade number 2, it actually ended up working, but only after we saw those bearish signals start to pop into the market. Right here, what was I shorting based off of? The fact that prices came back to retest the higher low. That's not enough. But if you look at what happened after I got stopped out, then we formed a lower high, pushed back down below that higher low level again, came back to retest it, and then that's when the short trade worked. So it comes back to trading the setups the right way. Trade number 3, I just messed up right here, trying to short the higher low, thinking that, oh, these 2 wicks showed me that the market wanted to push down past it, so let me short it as it comes back up into that level, ignoring the fact that we were in an uptrend, a choppy uptrend, but an uptrend nonetheless. So you want to make sure you go in the direction of the trend, and that goes back to the lesson I talked about earlier, which was don't try and outsmart the market. Don't try and fight the market. It's an uptrend. You had a higher low. You should go long. That's it. So that was the 13th. And then this was the 14th. This was yesterday. So I went long here during an uptrend as prices came back to retest the support level of a prior higher low. That's my strategy right there. I executed it perfectly, and it led to a winning trade. And today is what, the 15th? Let me bring that up too. Oh, hold on. I don't even think I did my notes today for the 15th. So let's go ahead and do that. Since we're here, we might as well, right? Now, these past couple of days, I've been doing okay. I've been just trying to stick to my strategy and follow it in the way that I know I'm supposed to. So it's been going fairly well. So let's go ahead and talk about it. Just trying to work myself out of this drawdown, man. That's it. All right, so today, what do we have? We have two trades. We have one. Let me bring my volume back up. I need that. Okay, there we go. All right. So we had two trades today. One right here, number two right here. So this came in the pre-market when I saw prices. They were trading in the zone. All right. So the zone was between, where my crosshairs at? There we go. All right, so the zone was between 35,000 and 20, and then a low of 34,930. So once I saw prices come back, test the bottom of the zone, they pushed up. What did they do? They created a higher low. So I was like, okay, let me see what the reaction is around the higher low. At first, they came back, respected that level, and then they had a nice push up. So I'm like, oh, okay. They bounced off of the bottom of the range, and now they're making a higher low that got retested, so they want to push back up. But remember what I told you guys, when it comes to a higher low that's inside of a range or a zone, you really don't want to go long. You really don't want to go short either, but I've been learning that you can go short if you see all of the signals that you need to, but you definitely do not want to go long. So once we see that higher low followed by this lower high where the blue circle is, I'm like, okay, we're already in a range. The trend was down that led us to the bottom of the range. We came back up, retested a prior lower high, but were never able to break past it, created a lower high, and then we broke back down past the level of support from that higher low, came back to retest it. That's where I shorted from, and then just took it from the higher low back down to the places that we established the most recent swing low. Took that. That was my first trade. So that's my setup right there, and it played out perfectly. I actually didn't get out for my normal 20 to 25 points because I'm like, it's in the pre-market. I got a good move. Let me lock in these games. I'm in drawdown. I'm just trying to take the best that I can get. But this trade could have been held because you had another lower high. So let's go ahead and just mark that up real quick since we're right here. All right. We had a second lower high coming off of a double top, right? Coming out of an overall downtrend. So all of the signs that we needed to stay in the trade were right there, and we actually could have added to this position too once we saw that lower high, and then just got out as prices came back to retest the bottom of the zone. But anyway, another scenario where I traded a higher low failure today. So we had push back up to the top of the zone once the market opened, came back down, established a higher low. But this higher low was definitely a weak variation, because if you have a higher low that gets established after you already have a down move like this, I don't know really how to explain it. All I can say is that this move was too extreme, this up move, and then this down move was too extreme for prices to just find support again the first time that they come back and retest this lower high. That's the best way I know how to put it into words. Like, you just got to see this move enough times to know that this type of higher low, nah, buddy, that's way too risky. So as soon as I saw this higher low, I was like, oh yeah, I'm definitely expecting for this higher low to be broken through. So then we got confirmation that the higher low was a weaker variation, because we had that lower high get established right here. So let's go ahead, mark that up. Boom, there we go. Okay, so that's the lower high. We came back down, broke past the higher low support level significantly. It's not like we just probed around it and tried to break it and see what the reaction would be. No, the level was at 981. They came back down to 951 within the span of 2 minutes. So they were not playing. They came back, retested it, couldn't even get above it, couldn't even close above it. So I shorted right there and then just took prices back down. Now I could have had better profits on this one, I ain't gonna lie, but I saw prices come down here at the time. Like, if you see what I was seeing, this is what I was looking at. So I was like, they kind of came back to this support level and haven't been able to break it, and they're establishing a little bit of a zone. I shorted at the top of the zone, so therefore I should get out towards the bottom of the zone. So I saw prices hit the bottom, and I'm like, should I get out? And then they start moving up. I'm like, yeah, I need to get out while I still can. But if I would have held it, it would have never came back to break even. It would have been one tick below, and then it would have shot all the way back down to the bottom of the range. But today I was not concerned on just maximizing the best that I could get. I was just concerned on seeing that cash register ring and ending the day with some type of profit, and I was able to do that. So made 104. Hey, I'm not mad at it. And also another big thing that you need to remember when you're going through a drawdown period is that you got to cut back on your size. I usually trade 2 contracts, and if it's a really good setup, I'll do 4 contracts. But I went back to trading 1s because it's like when you trade 2s and you're not doing well, it just puts too much pressure on you. You're like, dang, if I have 2 trades in a row that are both losses, I got to stop for the day. And then I'm going to have to wait till tomorrow. Well, who knows what I'm going to be like tomorrow? I might be in a different mental state. I might not be in the good state that I need in order to trade. I might be on tilt. So in order to just not burn through your account too fast before you can turn it around, you want to trade less size. So I went down to trading 1s these past couple of days. And I used to think that trading lower size would make it harder to make back the money, because if I make a 20-point trade with 2 contracts, that's really a 40-point trade if I'm trading 1 contract. So I'm thinking, dang, I got to get double the amount I got to get double the trade in order to make the same dollar amount that I'm usually used to. So I would kind of avoid trying to drop my size. But what I learned is that as soon as you drop your size, trading becomes easy once again. It's like drawdown what? These past couple of days where I've been trading on 1 contract, I've just been in rhythm. I'm like, whoop, that's my trade. Let me take it. All my setup signals are there. Boom, I'm in there. And it becomes so simple. And you can actually end up making more trading a smaller size than you would with your normal size, because you feel no pressure. If I had to take 4 losses on a 1 contract trade to equal what my loss would be if I'm trading a 2 contract trade. So I'm like, dog, I got so much leeway room that if I mess up and have 4 bad trades in a row, then yeah, I deserve to not trade for the rest of the day, because whatever I'm looking at, it's not working. But the bigger the room of cushion that I give myself, the less stress that I feel, and the more likely I am to just come in and say, look, I'm here for my setups. I don't really care about how much I make or how much I lose. I just care about trading my setup the right way, because I know if I do that on a consistent basis, I should be good. So that's one of the biggest lessons I learned about drawdown. Decrease that size, and you'll be surprised at the mental effects that it has on you and how it just makes you get back into your element as a trader. So let's see. I think that might be all that I have. We ran through everything. We went through everything from November the 3rd all the way back up to date to November the 15th today. So okay, one more thing. Part number 5, the best lessons that I've learned from this drawdown period. All right, let's talk about it. All higher lows are not high quality higher lows like we were talking about before. There are many variations of a higher low setup that are low quality higher lows. So as a trader, if you want to choose to trade this strategy, you got to make sure that you don't just focus on when it works. You also got to focus on when it doesn't work, and make sure that you can easily distinguish the difference between a high quality higher low setup and then a low quality higher low setup. Got to be able to distinguish the difference between those two if you want to be successful, because it's not just about the gains, it's about avoiding the losses. So you got to know which one of these higher low setups don't give you the best probability. Number 2, shorting higher lows from the lows of a swing is very risky. We talked about that before, and that goes back to the lesson that I talked about not shorting the lows and not buying the highs, no matter what the circumstances might be. Leave it alone. Skip it. Don't do that. Don't do it. Next, number 3, I need multiple bear signals before I short a higher low failure. A higher low failure is a lot less probable to work if the uptrend is strong and you haven't seen any bearish signs, because then you're basically just shorting a level because the level got broken through. That's not enough. You need more than that. Next, trading the zone from the middle is unreliable. We talked about that. Like, I mean, I can't even break that down any more than that. Don't trade from the middle. Plain and simple. And then if I could pick one of these lessons on here that I think is the most important for this whole entire video, I know this video is probably going to be like an hour long, but if it's one place in the video that you need to come back to, this is the spot. And that lesson is price action won't lie to you. Price action will not trick you. Price action will not play games with you. Price action is going to keep it 100 more than anything else in the market. Price action is going to tell you, hey Ty, you see this lower high? Yo, you see the second lower high I made for you? What am I telling you, Ty? I'm telling you that I want to go down. So how about you listen to me and you don't try and fight me and you just short the market like I'm telling you should, because price action is not going to lie to you. They're going to keep it a buck with you and tell you straight up, hey Ty, I'm about to go down. If you want to be long, that's on you. So always remember, price action is not going to lie to you. And then next, last but not least, if a trade fails twice, it has to be abandoned. And I don't know, that might be a different number for other people. Maybe it might be 3, 4, maybe 5 for you. But for me, the way I trade in sections. I wait for my setup and then I vigorously trade that setup and try and make it work. But you ever get into those scenarios in the market where you're just so hung up on one setup that you feel like you got to get it right, and you keep trading and keep trading it and it keeps not working, and then you hit your loss limit for the day and you got to walk away, and 10 minutes later after you walk away, the move that you was looking for, that you was trying to get so bad, then it finally happens and you just sit there and say, man, ain't this some bull? But yeah, you got to make sure that you don't get too caught up in one move. If the trade didn't work for me the first time, I'm like, okay, maybe I did something wrong. Let me come back the second time and get it right. If it didn't work the second time, it's like, all right, Ty, I mean, what you want to do? Just keep forcing it. It didn't work once. It didn't work twice. How many times you needed to not work before you actually get the message? So I've just learned that if it fails twice, man, let that go. Even if it goes the way that you thought it was going to go, so what? The market is going to keep moving. It's going to give you more opportunity down the line. So just wait, be patient. You know, you don't have to get it all right here, right now. The market is open from 9:30 until 4 o'clock. You got 6.5 hours to make your moves. Just sit back, chill, and wait for your best A+ setups and take those. If it doesn't work and you try it twice, let it go. And that right there, that's the best lessons that I learned from this. And I think I'm gonna go ahead and wrap it up on that note, because I'm glad I did this video. You know, it's one thing to write your notes out on paper, but it's another thing to actually write them out, type them out, come up here, have a discussion about it, and actually hear yourself be able to talk through all of the things that you got to work on. I feel good. You know, I've been able to have a couple of days where I've been making profits. So I just want to keep doing those things that I've been doing, and just come back to this video and watch it again and learn from it, so I can get better and get back to the trading, get back to the type of trading that I know I'm capable of. So I know this is a long video, so I appreciate you guys for tuning in with me, man. It's been a great session. I already know you guys learned a lot, because I did too. But I'll be back tomorrow, back on my grind again, as I should be, for all of these trade reviews. Get back to it and be consistent again. Just been going through some stuff, but I also been learning a whole lot. So I hope that you guys can take something from this. And yeah, that's all I got. I'll be back tomorrow, but until then, you guys have a good one, study hard, and take it easy.